Okay, Johnson, we are live. Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, CEO live chat for November 19th. Welcome everybody to Wall Street Reporter's feedback. we got one. Okay, we got to turn off. Let me turn off the connection here. Here we go. Live. Okay. I'll start again because this is going to be on YouTube. Okay. Welcome everybody to Wall Street Reporter's next Super Stock live stream for today, November 19th. We have with us once again Johnson Joseph. He is the CEO of Peak Fintech, PKKFF, PKK on the CSC. Johnson, welcome back.
Hey, Jack. Nice to be back.
Johnson, our audience, well, we got a lot of people. I think we got a couple hundred people right now so far in the first few minutes. So a lot of people are excited. The audience has been growing. Every time you're back, I think we get people because every time you're back, the stock keeps going higher. We started off at about, what is it, 50 cents? I think it was 40 cents. 40 cents a couple months ago. We're about $1.53 Canadian today. So our audience needs to know right now, what's going to get the stock to $5. So let's talk about that.
Well, Jack, when I first came on the show, when I came on the show a few weeks ago, I mentioned that our deal with BDC, Consumer Products Distributor BDC, was the biggest deal, the biggest partnership in the company history. Well, that was then, this is now. The transaction that we announced this morning with BJM, I believe, is now the most important transaction in Peak's history. Just here's what I mean by that. Just the relationship that BJM has with COFCO alone is priceless, absolutely priceless for us. Now, for those in the audience who don't know who COFCO is, I would strongly recommend you go to COFCO.com, look them up, take a look for yourself at what this company does. Essentially, COFCO is the largest food processing company in all of China. They're essentially China's breadbasket. They produce rice, meats, wine, soft drink, sugar, cereal, you name it. If it can be consumed, it's made and produced by COFCO. Now, their products can be found at grocery stores, on store shelves, convenience stores, online, offline, pretty much anywhere you shop in China, you will find COFCO's products. And now we have a partnership with one of their biggest distributors. This is absolutely huge for us. So as most people know, being in the food business, you know what? There's always going to be demand for food.
Right. Everybody needs food. This
is a business that is
not going away. It's not going to be obsolete.
Proof. It is pandemic proof. So it's an ongoing business. And BJM's business hasn't slowed because of the pandemic. Quite contrary, business picked up for them. So, and we have a partnership with this company right now. It is absolutely priceless for us. So that's why I believe that this is the biggest deal in Peak's history.
So, one thing I think, investors should know also is not only forget about the pandemic, the Chinese economy right now is booming. I mean, it's taking off. So let's kind of talk about what this deal with BJM could really means in terms of revenue, so people, investors can understand the potential. So essentially, you're doing what? You're going to be providing the platform for them so that they have 250,000 customers. BJM, right?
Correct.
So
yes.
250,000 of their resellers, retailers.
They're essentially retailers. Yes, correct. Yes.
And essentially, you're going to offer these 250,000 retailers your, basically lending platform.
Correct. Listen, as excited as we are about this partnership, BJM CEO, Mr. Zhang, is even more excited than we are, believe it or not. Okay.
Well, they're going to generate more revenues if their people can borrow money.
Absolutely. Listen, we all know that there's a systemic cash flow problem affecting most businesses in China. Okay, so this cash flow problem is preventing those businesses from achieving their full potential. Now, Mr. Zhang strongly believes that by offering credit to his clients, the retailers, the 250,000 retailers that you mentioned, by offering credit to these retailers, it's going to free up their cash flow. It's going to make it easier for them to manage their businesses, to buy more product from them. So essentially, it's a win-win situation, right? So he's happy because now all of a sudden, his clients have access to credit. Once we qualify them through this program, through the Cuba Lending Hub, they will qualify for credit and be able to purchase more goods from them. Believe it or not, if we do things properly, this can even impact COFCO's business. Now, I mentioned earlier, just a couple minutes ago, that the relationship that BJM has with COFCO is priceless for us. Now, what that relationship does, Jack, is that it takes us one step closer. I mean, COFCO they're humongous, they're a giant, right? Like, I mean, we would never thought, of approaching COFCO ourselves. But because of this relationship that we have with BJM, now entities like COFCO and clients like JD.com. JD.com, by the way, is also a client of BJM. It gets us one step closer to these giants in order for us to expand our businesses across the country. So that's why this is huge for us.
Okay. Now, what do you think? I mean, obviously, the main question I guess people are asking, I'm surprised nobody's asked this yet, is what can this deal with BJM generate in terms of revenues, for peak?
Okay, that's an excellent question. Now, I mentioned this to people before. We have to be careful, right? So we cannot disclose people's, BJM is a private company, so we have to be careful in terms of how we talk about their sales and everything else. That's number one. The second thing is we have to be careful not to talk about too much interest, because we are a platform, right? So the way we generate revenue is we charge service fees to the lending institutions for basically finding them lending opportunities, right? And providing credit monitoring services, qualifying the businesses, and so on and so forth, right? So we try to equate that to an interest rate, a value, so our shareholders and investors have a better understanding of potentially what this could mean in terms of revenue for us. Now, that being said, we're still tabulating the information for this deal with BJM. All I'm going to say right now is that we had mentioned that the BDC deal potentially, right, could be worth 1.3 billion in annual service fee revenues for the company. Let's just say that BJM is at least that amount and is more than the previous deal that we announced. So that's another reason why we think that this deal is the biggest deal in the company's history. Now, in terms of revenue potential, this is something I want to mention, Jack. I think it's very important to mention. Now, obviously, BDC has 60,000 clients. BJM's got 250,000 clients, right? So people should not expect that we're going to have all of these clients signed up on the platform tomorrow, right? So I can see people already with their calculators, 1.3 billion and, carry the 2, blah, blah, and stuff like, Peak is going to be making 2 billion in revenue next year. No, it doesn't work that way. What we have to focus on is really have to focus on the adoption rate. And that's why I mentioned before with the BDC deal, we launched this last week, right? So we had our first transactions. Now, what we're going to be doing over the next weeks and months is we're going to be monitoring the adoption rate, how quickly we're able to sign up these businesses on the platform, what percentage of them are going to be regular subscribers to the financing. We suspect that a significant percentage will be taking advantage of the program. But until we have real data, we're kind of like guessing at this point, right? So we also mentioned on a previous appearance that I made that we're going to be revising our forecast, right? So we're waiting to revise our forecast. We're waiting to see what the adoption rate is, how much financing these people, these clients are requesting, and that's going to give us a better idea in terms of revenue potential. We're going to need to do the same thing with this BJM deal. Now, we just announced the deal. The integration work shouldn't take too long from the experience that we had with the BDC. So we fully expect that some transactions will happen with the BJM deal before the end of this year. So hopefully we'll have a few transactions, we'll do the monitoring, and early 2021 we'll be in a much better position to say, okay, you know what, this is how much we can expect from this partnership. The other thing is that the year's not over, right? I mean, we have an absolute machine in China, a business development machine. So this BDC deal that we announced a few weeks ago, the BGM deal, these are just two distributors, right? So there's really nothing preventing us from doing other deals. I'm not saying we're going to have other distributor deals between now and the end of the year, but that's something that can also happen, and that will have an impact on the revenue potential of the company.
Okay, so we're going to jump into, we got a lot of audience questions. We're going to jump into those questions. But, you know, I think last week you announced kind of, which I think was one of the most important news releases you've had, is this, you know, speaking, which kind of gives maybe people some insight into the potential adoption rate of the BDC deal. You reported some initial results. So can you kind of, you know, expound on that? Like, you know, give us some more details on kind of the initial uptake that you're getting, and maybe what people can learn from that.
Yeah, actually, yeah. What we announced last week was that we're expecting the program with the BDC to start by the first or second week of December. Some of BDC's clients jumped the gun. They had an opportunity, even though everything wasn't completely ready to go from a technical standpoint with regards to the program. They had an opportunity, and they wanted to know if they could get started sooner rather than later. So if that's any indication in terms of adoption rate, it bodes well. Now, I'm not going to say right now what we expect in the first few months. But more businesses, since that transaction, more businesses have signed on. I think we had four, right? Last week we announced transactions implicating 4 retailers that were clients of BDC. Since then, more have been added to the platform. A few more have been added to the platform. There have been more transactions, but again, we're waiting to see, to have a little bit more history, if you will, before we start publishing this information. But in terms of adoption rate, what I can say is that it's very encouraging, Jack.
Okay. So let's jump into the questions. I guess this kind of ties into that. What percentage penetration are you looking at between this, what is it, the BJM, BDC, any of the new partners that you're going to be signing on? They have, you talk about 300,000, a universe of right now. In other words, right now your universe is 300,000. So what percentage are you going to get? 30,000, 60,000?
You know what? Like when we looked at the numbers for BDC, we were forecasting it's a ramp up, right? Like, I mean, the first 12 months, we're expecting anywhere. You know what? I'll give a range. Okay, this is a little bit safer, so I'll give a range, right? So the first 12 months, let's say between 15 to 30%. I don't know if that's that's reasonable. And then depending on how that goes, we'll see, like, the second 12 months and so on and so forth, right? So eventually the businesses that sign up, the businesses that are clients of BDC and BJM, these are retailers, and retailers typically, they buy merchandise on a regular basis. They need cash to replenish their inventory and so on and so forth. So we really expect that once the program is really known, okay, and it's working well, we anticipate that over the next 3 years, we can approach anywhere between 40 to 50% of these businesses will become regular clients for us.
Okay. So in the food business, it's a much higher volume of transactions, right? The inventory is different, so you're going to have potential. Actually, here's Sarfraz. I guess this question here. You mentioned the revenue, the potential of BDC was 1.5 billion. So what is the revenue potential of this deal? You know, if you get full adoption of the 100%, which, you know, you probably won't, but what if you did?
You know what? I addressed that earlier. All I can say at this point, unfortunately, so far as I cannot be too precise for the time being. But all I'm saying is that this new deal is at least, okay, in terms of revenue potential, it is at least as large as the BDC deal, but it's larger.
Okay, so Derek is asking about COFCO. Now, how do you spell COFCO? It's COFCO?
That's right.
Okay, and like he wants to, what like U.S. company is similar to it that they can compare it to? I don't know, Archer Daniel, Midland. I mean, who's like COFCO in the U.S.?
Oh, good gosh.
Do they have something like that?
Yeah, it's hard to compare COFCO to a U.S. or Canadian, a similar U.S. or Canadian company, because COFCO is a state-owned entity, right? They have resources that other companies do not have. But think of COFCO as, what's the big name? Maybe like General Mills in the U.S. They make Post-brand cereals. They make what's
everything. They make a lot of different, I mean, thousands.
Right.
Yeah.
They make flour, like, you know, like all kinds of, you know, consumable goods, right? So think of COFCO as a company like that, but to a power of X, right? Because they're a state-owned company, bigger market in China. The U.S. has a population of what, 300 million. China's got a population of like 1.4 billion people. So obviously, like, I mean, it's a much larger company than I think anything that we would have here in North America.
Sean's asking about, let's talk about maybe the revenue model. We have, you know, a lot of new people in the audience. So how does your revenue model work? So basically, you know, these potential consumers, they need a loan. You know, let's go through the whole platform, because we do have a lot of new people. So explain to them exactly, you know, what Peak does, how you make money exactly.
Sure. Okay. So what we do is we operate a platform called the Cubular Lending Hub. And the Cubular Lending Hub, what it does is it matches small and medium-sized businesses that are looking for funding with the right lenders using analytics and artificial intelligence. So what the Lending Hub is, it's an ecosystem of small businesses and lending financial institutions. So those lending financial institutions could be banks, they could be alternative lenders, or we're not a P2P platform. Okay, so we do not allow individuals to lend and to borrow on our platform. So the lending institutions have to be, like I said, institutions. They have to be businesses. Okay, so that's what we do, and we charge a service fee. Now, very importantly, I know there was a lot of a few weeks ago about Ant Financial's IPO. A lot of people compared Ant to us. They are a platform, but the difference between Ant and us is Ant is actually providing, they're essentially a platform, but they're also a bank. They provide investment services. They provide mutual funds. Well, no, money market funds. I'm sorry. So they were perceived
financial conglomerate, really. I mean,
yeah, they're a diversified financial services company, right? So they were subject to certain regulations, which we are not, right? The reason we're not is because we charge service fees. We do not charge interest, right? So the financial institutions that do business on the Cubular Lending Hub, they charge the clients in interest. They charge the clients, obviously, interest for lending them the capital, right? What we do is we charge the financial institutions a fee. What we have done is we tried to make it simpler for people, for our shareholders to understand by equating our fees to a percentage of the interest rate charged by the financial institutions. But our fees are actually based on the opportunities that we present, the matching, right? So bringing the right lending opportunity to the financial institution, we charge a fee for that. Depending also on how long the loan is for, the fee, we charge another fee, for instance, right? So these are typically short-term loans, anywhere between 3 months to 6 months. Sometimes they'll go as much as 12 to 18 months, right? So we provide monitoring services. So while the loan is active, the financial institution can use Cubeler, Lending Hub, to follow the progression of the business, right? So if the business, for some reason, while the loan is still active, if the business runs into issues or anything like that, then the lending institution can take measures to communicate with the borrower and say, hey, you know, are you going to be okay to make this payment? Whatever, can we work together? So that service we also charge a fee for. Now, depending on how long the loan is, obviously, if we have to provide the service for a longer term of time, the fee will be a little bit higher, right? And the other thing that that is part of the fee model is oftentimes when people borrow, it's to purchase, replenish inventory. There is a good associated with that, right? So dealing with the supply chain specifically, if a client gets a purchase order finance for a particular material, that material needs to get shipped. It needs to be warehoused oftentimes. So we have partners that provide logistics, shipping, warehousing, and charge a markup on those fees as well. So the fees that we charge essentially are a package, and we don't, like, you know, to simplify it, we tell people, hey, you know what, you can expect us to earn between 2 to 4% of the interest rate charged by the lending institution. So it makes it easier for people to understand.
So 2% of the rate charged.
Correct.
You keep. Okay. So let's say in terms of let's call it in dollar terms, or so in other words, if somebody borrows, you know, let's call it $10,000, they're paying 10%. You get 2% of what? You get 2% of the interest rate on that 10%. Is it, you know, or on top?
No, we get, no, it's not on top or anything like that, right? Because then we would be like, you know, the interest with the lender. That's something that we do not do, right? So the fees that we charge to the lender will resemble, let's say, about 2% of. So
you're not okay. So basically, you're not charging interest per se. It's
no,
fees, but they add up to roughly. So it's like
exactly. That's exactly what we're saying.
Yes. Make it, you know, politically correct, you know, in with, you know, the government and everything else. And I think one key thing I think people need to understand is that, you know, I think where Ant got into trouble, you know, there's a whole, you know, the politics in China are complicated, and Ant, I think, you know, they may have stepped on some toes, or a little bit too big. They're getting a little, like, too much centralized power. And, you know, what you're doing is essentially, you know, Peak is working with multiple financial institutions, banks. So the money gets spread around. It makes a lot of people happy. So you have more support, shall we say?
Right. Yes, you can put it that way. Yeah.
Okay. So it's a key point to understand. Okay. So we got okay. Let's go to a couple more questions. Network effect is an interesting question here. The network effect. You basically, you are getting kind of a network effect and first moving. Is it a first move? I mean, there are other people, but, you know, you're getting scale in this business.
Yes. Another thing I want to mention about what we've done, right? Like, I mean, for those who are not familiar with the company, we're in a business that is extremely scalable, right? First of all, the demand, right? I think most people can understand that small and medium-sized businesses, micro businesses, struggle to have access to credit, right? And having enough information, having insight that you need in order to safely lend to those small and micro businesses is not always, like, you know, easy. So we provide both the service, obviously, to the small and micro businesses, and to the lending institutions as well, right? So it's a win-win for everybody that's involved. That's why our business has gained so much traction over the last couple of years, right? Now, where we're at right now is we are in a growth spurt stage, right? So it's all about scalability and how quickly can we expand our services throughout China. That's the name of the game for us right now. Now, what we have done, I think the question had to do mention about networking, right? It really is all about networking for us right now. Now, think about the major ways in which we have that we have at our disposal right now that we started to demonstrate in which we can expand our business, right? So we have the Jinshar platform. The Jinshar platform is a mobile app used by loan brokers, right? So they're out there pounding the loan brokerage sales reps are out there. It's their job. They're pounding the pavement every day they wake up, trying to find clients, right? Trying to find people who need loans. That's how they make their money, right? So we have an app now that these brokers can use. Whenever they have a lead, they submit it to the Lending Hub and they earn commission on that. So that's number one. Okay, so we have, Jinshahar had at last count close to 40,000, if not more, loan brokerage reps who are feeding leads into the platform. Secondly, a couple weeks ago, we announced our second financial center, right? So the financial center is something that a concept that we're working with local governments, where we implement the Lending Hub concept on a citywide level, right? So we did that in the city of Jiangyin. We had a second financial center that we're setting up right now with the city of Nanjing, right? So the concept behind the financial center is, this is something that is being pushed again by the local government. The local government is inviting all of the city's small and micro businesses to join this financial center and to qualify them, to use the Lending Hub to qualify them for credit, for loans from the city's lending institutions, banks and lending institutions. So that's the second way, okay? So the financial center concept is something that we can go city to city in order to expand their services. And third is what we just mentioned, what we've been talking about today, is this, this financing program that we established with some of the country's largest distributors, right? So we are right now attacking the retail world. We know that there's a huge demand for our services in the retail space, right? So retailers buy, as I mentioned earlier, they buy merchandise, inventory on a regular basis. They buy and they sell. So there's a huge turnover, right? So they constantly need financing. They are the ideal clients for our services. Now, by working with these large distributors, BDC, we picked up one agreement, we picked up 60,000 potential clients. BJM, one agreement, we picked up potentially 250,000 clients. So you see here, by working with these distributors, we can, how quickly we can scale up and expand the Lending Hub services throughout China. So what it comes down to, Jack, is, as they say, rinse and repeat, right? So we have the formula right now where we basically can just replicate everything that we're doing. This is a very scalable business. We have potentially right now, 310,000 clients with these two agreements. And we have a pool of 100 million small and micro businesses. That's our client base. So we're just getting started here, right? It's just a repetition game for us.
It's like any, you know, it's like any of the, any of the huge tech companies you see, they have a similar kind of model. But here's what's interesting, I think, Johnson, so basically the takeaway is you have multiple channels of getting business. You have the guys bringing the deals, you have these big partnerships, then you have the deals with the cities so there's multiple channels. But I think one of the key things is you have this, which again, we gotta talk about this more, is the AI, the analytics that you have, the big data, the machine learning, the deep learning, whatever you want to call it. As you're getting thousands and thousands, or maybe it could be millions of transactions coming through, your system is basically, that data becomes very valuable. That learning, like default rates, payment, all that stuff, it becomes as much as the business than the
other. Absolutely, Jack. Like, I mean, again,
it becomes more valuable.
That's an excellent point. And again, this is something that a lot of people don't realize about the Peak Fintech Group, right? So we are at the core, we're an analytics company, right? So we provide analytics right now, artificial intelligence for banks and lending institutions. But as you mentioned, the more transactions that get processed through the platform, right, the better the analytics get, the better the AI gets, right? So we're becoming better and better at predicting defaults, okay, loan defaults, which makes the services that we provide more and more valuable to the banks and the lending institutions that do business with us. And the other thing is, yes, there is a massive amount of information here that we're accumulating, and this data can help, can be used for different purposes, right? So the lending institutions right now, the financial institutions, they're using us. They're using Peak Fintech Group basically to mitigate credit risk. to find clients and increase their loan books, right? But this information can be used to provide additional services, okay, to these clients, these hundreds of thousands of businesses that are our clients right now, insurance, all of these products. But the good thing about us, though, is that our plan is to continue to remain an analytics company. So we don't want to provide any of these services. I know it could be tempting, right? So you have all these clients, you have all this information. Hey, why not be like Ant and start providing, banking, insurance, or whatever and stuff like that. It's tempting, but we're committed to remaining an analytics company. We believe that other companies, insurance companies, other companies that want to provide services to small businesses and small business owners will eventually turn to us, and we're going to be able to work with them.
Okay, no, it's a great strategy, especially in China. I mean, you don't want to get too involved in a lot of things because, again, you want to sort of keep your head down, make money, and scale. So we're kind of running out of time. We've got time for just a few more questions. Johnson, we're gonna have to have you back next week. We're gonna probably spend like at least an hour, maybe an hour and a half, because we're gonna have a lot of questions. Eric is asking, we had a couple of people asking, global expansion. What's the plan for expanding globally beyond China?
Listen, I've said this in the past. China is the biggest market for us, right? And our clients are small and medium micro businesses. There's no bigger market than China. So we want to do China right? So we wanted to take our time, do China right, and grow the business. But there are a couple of countries that are on our radar screen right now. Asian countries, potentially European countries. But right now, really, we really want to focus on China. So by 2021, at some point before the end of 2021, we may get more serious in terms of expanding to other markets. But right now, we have tunnel vision, so to speak. Our focus is on China. There's a lot to do in China. These partnerships that we're making, these partnerships with the distributors.
China to make,
right?
You don't need to leave China for this to be a
the revenue that we can generate just doing business in China alone is mind-boggling. But we really want to focus on working with the cities, working with the distributors. Again, I mentioned e-commerce is huge in China. The deal, the BJM deal, not only takes us one step closer to doing business with giants like COFCO, but also the online portals, right? I mentioned that JD.com is one of their clients. As people know, we have our eyes on those large e-commerce portals, whether it's JD.com, Tmall, which belongs to Alibaba, Pinduoduo. We really want to have a deal, a partnership agreement with one or all of those huge Chinese portals. So that's really our focus right now.
Okay, Johnson, we've got a last question, and we're going to catch up with you probably next week or first week of December. What do you have? What kind of news flow can we expect? What kind of news flow can we expect in the next 2 weeks before you come back? What do you have happening right now?
I can't say too much about it right now, but we'll be filing our Q3 numbers a week from today, actually next Thursday. I believe that there will be a news release to tell people how they can participate to an investor conference call. That news release will go out at the beginning of next week, if I'm not mistaken. But next week, that's going to be our focus, the third quarter numbers. After that, what people can look out for is really just a little bit of more of the same.
Rinse, wash, repeat. People are going to get bored from all these deals at some point.
There you go. Each time we come on the show, we seem to be announcing a bigger deal than the previous deal, right? So obviously, if we were to do something with one of the large e-commerce portals in China, that would be huge for us. That would then be the biggest deal in the company's history. So I'm not saying that we're going to have a deal with one of the e-commerce portals, but this is something that's possible between now and the end of the year, or by the end of the first quarter of next year. Certainly, there's no secret. That's our objective. We want to have a deal with them. We think that it would make a lot of sense for us to be working with one, if not all three of those large portals. So that's something that investors can look forward to.
Okay, so a lot more to come. We're really, I think, in the first inning of the game here.
Absolutely.
So very exciting. Okay, Johnson, thank you for joining us, and we'll have you back as soon as possible.
Always a pleasure, Jack, and I look forward to being back.
Thank you again. And next time, hopefully, the stock will be over $2.
Let's hope so.
I'll see you later. Thank you, Johnson.
All right, Jack.
Okay, that was great. Let's get ready for our next presenter. We have FansUnite. Well, busy day here in the markets. Stocks are moving. Let's get the fans on here. Okay. Okay, stand by. And Scott.
Hello.
You're there. I want to make sure we have good volume. Can you speak?
Yeah, how's this? Can you hear me okay?
A little louder, a little maybe.
If I come in a bit closer?
Yeah, a little more.
Okay.
Okay. Okay, so I just want to keep talking. I just want to make sure we have good sound here.
Okay, just testing the sound.
Okay,
how's that
and when is fans going to $3?
Are we live on TV?
We are live.
Okay.
Okay. Okay, so let's see. Okay, so the sound is good. I think we're ready to go here. Okay, let me just add one more thing here. Fans, okay. Okay, welcome everybody to Wall Street Reporter's next Super Stock, a live stream for November 19th. We have back with us FansUnite, FANSFUNFF, over the counter. Scott Burton, CEO. This company's got some tremendous news recently. The stock is finally moving in the right direction towards the scale new heights. So Scott, welcome back.
Yeah, thanks, Jack. Good to be here.
So Scott, so what you got? Are you gonna share the presentation with us today?
Yeah, I think we said we'd kind of go through that one more time. We've obviously in the last couple of weeks, I think we've added a lot of new people as shareholders. So I think we'll do the slides one more time of the sort of old ones. I've added a couple of things, and then next week I think we'll probably go back to Q&A, and then the next time we do a presentation will be an updated one. So. Yeah, I'm happy to jump right in to this.
Let's pop it on the screen, and then maybe we will see some demos. People always like that.
Yeah, just let me know when you can see it. Okay, Jack.
Okay, hang on a second. We got okay. I see the screen. There
okay, great. Yeah, so thanks everyone who's here and those who may watch later. As Jack mentioned, we're FansUnite. So we are an online gambling technology company. We operate globally. We really focus on the core technology behind powering betting brands, our own and then other people's. So FansUnite is now a merged company as of August 11th. So it was bringing together a couple of companies, FansUnite being the original public company, and Askott Entertainment. So I'll speak a bit on both companies and what they brought to the merge, but just talk about the industry and space and why I think we're on Jack's show and what we have ahead. We're in the online gambling space, so it's a massive market, well over $150 billion now, growing 8 to 10% a year. The changes in the U.S., changes coming to Canada, that's just exponentially growing year over year. So we're at a great time in the market, especially with the shift to more and more people looking at online solutions and brick and mortar casinos kind of struggling with the pandemic. The major inflection points, so we have a number of parts of the business that are all really turned on and moving into sort of high gear at the moment. So multiple revenue streams, all generating revenue and all poised for, I think, significant growth We're talking not the single digit type percentages, but in the triple numbers. And that's not just short term, that's for the years ahead. And then many catalysts will be announcing that just shows you how we're going to hit that growth in revenues. So a quick look at the structure. As I mentioned, FansUnite is the parent company. Merged the two companies below, which was FansUnite, which was really more focused on the traditional sports betting market. So football, basketball, baseball, soccer. Askott Entertainment was a company that was more in the esports space, so the massive and fast-growing space of online video games. Askott Entertainment also was in the technology building for online gambling, but building out products for esports betting, esports daily fantasy, and now casino-style games. And then McBookie is a direct-to-consumer site that's got a UK focus, so it's really a Scottish market gambling site. Does extremely good volume, growing very fast, and that's a site that FansUnite acquired earlier 2020. And then underneath, you'll just see some of the brands that as a joint company that we operate. I'll speak a bit about those down the line. Jack, here's something I just added from previous presentations, because August 11th was when FansUnite and Askott merged. So that was a massive deal for both companies, transformational deal that people look for. We did a financing, so we closed an oversubscribed $5 million financing at that time. That was to give us plenty of runway. September, we announced a pretty major partnership to enter the U.S. market. So we've been more focused globally, so outside of North America. A lot of challenges were in the U.S. space. They repealed the betting laws a couple of years ago. We were looking for a good way to enter. We made a partnership with Gameco. Gameco has licenses throughout the U.S., so it gives us good license coverage. They also have great relationships with many of the casinos, tribal groups, and so that's going to be our entry point into the U.S., and we look to announce a deal on our first installation soon. In October, we moved on to announce a Pinnacle partnership. So Pinnacle is one of the leaders in sports betting and especially esports betting. So we now are the only reseller of Pinnacle's esports data on our technical platform called Chameleon. I'll explain what Chameleon is in a couple of slides. We're building our own casino-style games, and we announced our first casino aggregator deal. So we are pushing our games out to casino aggregators who then distribute them around the world. The first deal with the ear can see our games go into 120 different online casinos and sports books. So there's another point of massive exponential growth. That's just one aggregator. And then McBookie, our consumer-facing UK site, it's been around 10 years, had its biggest month in history. Year-over-year revenue for October was up over 400%. We had a major gross win, a number of 602,000, which was the biggest ever. And then just earlier, I think maybe a week ago, or actually it could have been Monday, we announced we moved up to the OTC QB. So I know you saw we had a massive volume day on Monday off of that announcement. So this is just talking about the execution and how powerful the merging of these two companies has been and how fast we're now able to move as a combined entity. So really was that 1 + 1 = 3 combination, I think, between Fans and Askott. Some highlights of the group, we have 4 direct-to-consumer products that are live in the market now. So you'll see some companies just focused, they have 1 brand out and doing well. We have 4, and with us owning the technology backbone, we have the ability to launch our own direct-to-consumer brands very quickly. We've done over $350 million in betting volume between the entities. On the B2B side, so licensing Chameleon, we've got 4 deals live, 2 of those platform sites are live. 4 deals signed and 2 of those sites are live. Combined, we have well over 300,000 registered users in the network. Our first 2 major partnerships have been announced, and we have, I think, more to come there. So we'll go through the offerings. We'll start with the B2B. So these are the business to business, and then we'll talk about a couple of the B2C companies we have. So Chameleon is the one I mentioned, and this is, again, the technology backbone now of the whole company. So this can power anybody's betting brand, and that can be sports betting, it can be esports betting, it can be casino, or it can be all of those. We really started Chameleon as an esports platform, so it's very focused on sort of the millennials, people that are looking for highly engaging products, not the traditional sports betting that you would expect typically. So I don't think we've shown this for a while, Jack, but just to give people a sense of, our vision for esports betting and how we show it. This is a demo of the Chameleon site. So this is our demonstration. This is what we would license out to partners if they want a full betting brand. So we do everything that includes hosting. We can do the gambling licenses for them. We can do all of the payment processing management. We can do the KYC, which is the age, identity, location verification. We've been certified and tested in multiple jurisdictions around the world. And then everything they have on our platform is really a feature they can turn on and off. So if they want daily fantasy, they can have it. If they choose not to, they don't have to. It localizes very well, so we can change language, change the look and feel. But really, stream betting is what I think we were known for bringing out for esports betting. And for people who don't know, streaming is where you watch other people play video games, either casually or professionally. So Twitch would be the site that most people would know if you're going to go watch other people play video games. So here what we do is we can embed streams from any game. You're looking at an example of Fortnite here. But really what we're trying to do is keep people on site. So time on site, no reason to exit, and then lots of activity. So this is around betting. On the right-hand side, you'll see what people would, I guess, call maybe proposition-style bets, but these are bets that can pop up throughout the entire match. So this could go for an hour. Every 20 to 30 seconds on the right, we'll be popping in bets. You can place your bet really quickly, confirm. And the nice thing about these is these are all going to settle, some within the next 2 to 5 minutes, some for the entire match, but it's really engaging. So at any time, you can go check your bets. You can see what you bet. And these are just settling, so you can just be placing hundreds of bets during a competitive video game match. So this is kind of the engagement we believe, especially the esports fans and the younger demographic are looking for, as opposed to placing a bet on a Wednesday for a Sunday afternoon football game and then coming back and checking Sunday. We want people to do all their activities around betting, casino, everything just from our platform. So going back to the presentation, that's the Chameleon platform. I guess I should mention just a couple of things around that. So that's where we said we've got 4 deals signed. 2 sites are live running the Chameleon on the B2B front. All of our own direct-to-consumer will be running on that platform, other than McBookie at this time, which we may switch. The revenue model here is nice because it is, we get an upfront integration fee from the partners. We get a minimum monthly license fee, so we get a monthly recurring revenue that's guaranteed. Our typical deals, we aim for 36 months to start. There's fairly high switching costs once you're embedded with a gambling platform, and payments and hosting and licensing. And then the exponential side that we're looking for is the blue sky of revenue share. So as they grow, we take a percentage of revenue. So every site we have, we get the guaranteed minimum, but that's really not where we're looking for the big numbers. It's when those sites turn into hundreds of $1 million betting brands, and we're taking a percentage of the revenue as they grow. So that's the Chameleon model. Askott Games is a new part of the business we announced a few weeks ago, I think on Wall Street Reporter as well. So Askott Games is the division of our company that's building out our own casino style, or what we call RNG games. So they're built on top of a random number generator system. We have our own certified random number generator that allows us to build endless games on top of that. So if you think of any online casino game you look at, which could be poker, it could be blackjack, could be roulette, they're all sitting on top of an RNG. Where we saw the gap in the market right now, and it sort of comes off the back of our move to esports back in 2014, was there's a wave of gamers coming at us. There's this younger demographic that does not watch baseball, that does not watch basketball, that isn't interested in spinning fruit wheel machines online. So we are trying to get them into these gaming sites, but then we want them to stay, and then we want to generate more dollars per user, and that's where casino comes in. So in a traditional sports book, you're really pushing to move people into casino as well, because that's where you're going to really make more money. So we wanted games that would appeal to that type of user. So we're focused on video game look and feel, video game themes, but more importantly, there's a bit of sense of control on the games as well. So we're trying to make them less passive, just pushing a button and watching, but having the user engage with the game and keep them coming back. So this is a new offering. You can go to our new site called Askott.games and check out more of the games. We've got 2 complete. The 3rd's almost done. The 4th is on the way. We aim to have 10 of these out next year. And these are the ones where we're signing them into aggregators. So we get massive distribution, saves us the time and effort of doing single deals. We do a deal with one aggregator like the EAR, and it opens up 120 online sports books and casinos. So a big piece of the business in 2021 is going to be completing a suite of up to 10 games and getting them into multiple aggregators. That puts us in front of millions of users, end users. So on the B2C side, so this is the direct-to-consumer sites that we currently power or partner with local people in market to power. So McBookie, as I mentioned, is our biggest revenue generator. As I mentioned, the massive growth. It's been around 10 years. It's a great brand in the UK. FansUnite was the sportsbook side of FansUnite. So it was a social sportsbook to start. Built up a pretty good user base, and now we're looking at turning that into more of an affiliate model in the US, so we can drive traffic to real money gambling sites. Esports bets and esports pools were the esports brands that Askott had initially. They've gathered over 200,000 registered users in 190 countries on the esports side. And then Vamos GG is the latest brand that's come up on the Chameleon platform. And this is an example of how we can localize and go into markets quite quickly. This site is focused on the Latin American area, primarily Brazil. So it's in Brazilian Portuguese. By doing this and having the technology and being able to launch brands, we can go into regions that are maybe underserved, especially if you want to do something like focus on esports. We can really focus on the payment methods that are good for that region. Payments is always the most challenging part of running an online gambling site. Biggest friction point, biggest drop off if you don't have local payment methods. So we can focus payments, focus marketing, saves us a lot on the customer acquisition costs, but allows us to really do that. So that's the power of having the Chameleon platform behind us, is we can look to these regions and launch brands pretty quickly. So I'm going to jump through because we don't have a ton of time, but this is the FansUnite Sportsbook look and feel. So we'll be powering this from the Chameleon platform. And that was one of the things that we looked for when we merged was Askott was really a leader in the esports industry, launching their first esports product back in 2014. Their platform was recently nominated or shortlisted for Esports Platform of the Year award. So FansUnite, as they were looking at their growth plans, you can't ignore esports anymore if you're a sports book. So they were looking for that, and Askott, as we were moving forward, because I founded Askott, for our next steps, we were looking to bring some traditional sports into the platform. So by having the FansUnite Sportsbook and having the McBookie, which was the massive revenue stream for us, the combination just made for a powerful company as we've got now. Here's what Vamos GG looks like, similar to what you saw with the Chameleon. This one is up now, and the marketing really starts next week on this site. So licensing is a big part of what we do. It's what we can offer to people, and I think it goes to show the infrastructure that we've built out for a company of our size, and our experience in navigating a difficult space when it comes to regulation. And we've always embraced it, and that's how we started out as a highly regulated company. There are operators who go the other way. We knew regulation is not going away. There's just going to be more of it. So we wanted to position ourselves to work within that environment. And so we've been through some of the strictest and toughest jurisdictions out there. So going back to 2013, our first license was in the Isle of Man. In 2017, we were the first esports betting company with Askott to be licensed in the Isle of Man. We were the first crypto betting company to get a license there as well. 2018, we actually chose to move from the Isle of Man. Through a partnership we have in Curacao, we can offer sub-licenses to any partners in Curacao. We have been completing the process in Malta. So with the Malta Gaming Authority, which is the oldest jurisdiction in the EU, so Europe, we wanted basically access to the wider European market. So we're completing 2 licenses there now. One is a critical software supply license. That allows us to sell our software to any other Malta licensed operator in the EU. So opens up tons of opportunities on the business to business side for us. And then we're also going to have a direct to consumer license, which will then allow our partners who want to run a betting brand in Europe but don't want to go through the licensing process. We can white label to them, so we can give them license coverage, payment, banking, all of that. In the process now of getting the what's considered the gold standard of licensing, which would be the UKGC, the United Kingdom Gambling Commission. So we began that process, looking for a Q1 licensing in the UK, which then opens up the UK market. And then the US is one that we weren't initially really looking at right away. But with this GameCo partnership that I mentioned earlier, we now have access to the US in a number of states where we have license coverage through GameCo and partnerships and some business development. So we'll be making a move into the US sort of much quicker than we thought. Obviously, people know that's a massive market, and it's just at the first stages of opening up with the repeal of PASPA. I think we're up to 26 states now that are going to allow sports betting. That's going to get close to 50, if not 50, in the coming years. So huge opportunity in the U.S. and one that I didn't have here because it's kind of developing as we speak, but we're a Canadian-based company, and Canada has been a government monopoly on gambling for forever. Ontario is the biggest province here and just announced that they're looking to open up to outside operators. And I believe there's going to probably be some preference giving to operators who have operated in places like Malta in the UK. So I think we're sitting sort of at the precipice, I'm not sure if it's where it's going to land because there's a lot of government involvement, but I think, in the coming months, we'll see a lot of very positive developments on Canada opening up. And I think we're well positioned being here in Canada, but also have gone through some of the toughest regulators in the globe. So stay tuned for Canada news. Really, we've got a great team, especially with the merge. We've got teams spread out sort of around the world now. Brought together a very solid board. So Darius and myself, Darius was the founder of FansUnite. I founded Askott. We're on the board, but we really wanted to bring some powerful industry people that could help us in the key areas we're looking at, and we identified the 3 we have. So Harish worked for the biggest betting gaming company in the world called Paddy Power Betfair. They now go under the name of Flutter. He was the president of their Asia operations, very much involved in the M&A. So we see M&A as part of our path forward. We also see Asia as a massive market. Harish is based there. So he's really the door opener we needed there. The U.S. is an area we wanted some more expertise in, and I think Chris Grove is recognized as one of the leading experts in the online gambling space in the U.S. He's a partner at Eilers Krejcik Gaming, which is one of the major research people in the space. So for our U.S. strategy, Chris is key. And then as we develop the Askott game side, this is the casino-style games. James Keane is not just a pioneer in gaming because he was in the early days of online poker. He was on the founding team of Paradise Poker. But he's CEO of a social casino games company that's been building games for, I think, 20 years now. So those were real 3 areas we were looking to get some help, and I think we nailed it with the board we were able to put together. So coming back to the start where we just talked about the opportunity, massive opportunity, and we're well positioned because we're not really building anymore. We're always improving. We're always adding some things, but we have the infrastructure, we have the team, we have licensing, so we're generating revenue. So we're ready to go in this massive space. Mentioned the inflection point. I think we're just starting to see it, as you've noticed from the last couple of weeks. But I think people are starting to realize the company that's behind the stock and the people and the infrastructure. And now we're really starting to kind of hit our stride and go. So nothing but significant growth ahead of us in terms of B2C, more licenses, the US. The catalysts, we have many of those coming, so we'll be announcing our new licenses as we get them. looking to announce our first US partner. So GameCo is really our partner in reselling into the US. So we'll be announcing our first partner to take the Chameleon platform, full suite of RNG games next year. And then we are looking at some strategic opportunities that would grow revenue for us or improve the technology backbone we currently have. So those are the three real major things we have going. And just to touch back again on execution, because I think it's important for anybody looking, I think you need to look at the team. I think you need to look at the space, and then I think you need to look at their track record. And just I'm not going to run through them all again because people can watch later. But these are the things, in the weeks that we've been a combined entity, we've gotten through. I don't think we've announced our biggest news yet, so that's still to come for us in the coming weeks and months. And then you can just follow revenue. So I think again, it's nice as an investor where you can get in at the beginning stages of a revenue ramp. So always be contacted anytime. I know Jack get a hold of us. We have some great conversations, so happy to chat to anybody. Three people to contact there: myself, Darius, and Prit. So I'll stop sharing and jump out of the presentation.
Okay, Scott, I know you got about 8 minutes here. Hopefully.
Yeah. Sorry, I'm a bit tighter today.
Okay, so we're gonna probably get you next week. We'll have an extended Q&A. Let's see if we can get a few questions. Okay. How do you plan to promote the Chameleon platform? Get more people.
Yeah, so it's been great so far. We have a very good pipeline of deals in front of us, and we've signed 4, and we've yet to actually done any business development. That's all been inbound. So through our network that we have through our board, through being nominated for a few awards for the platform, we are well known, and people are coming to us, especially when they're looking for esports. But what we're moving towards is we will be adding more on a business development team. So we're putting a team together that's going to actively go out and push the platform. In the gambling space, in the past, conferences were huge. Actually sitting, with a booth and sitting there and networking. That's changing a bit with the situation we're in, but we'll be doing, as soon as we can, we'll be doing a lot of that. We are also going to be, myself, writing some regular pieces now in Gambling Insider magazine. That'll be bi-monthly piece I'll be putting out, and a few other things. So so everything's been inbound to date, and we have kind of more than we can handle in terms of inbound requests at the moment. So we're scaling up on the dev side. And then we will be actively outbound marketing with more of a business development team beginning of the year.
I think one of the big things right now, the sports betting is getting a lot of headlines. I think we've talked about it before. We've had one of the big ETF gurus on there saying that all these guys are going to have to make money on the casino games. Because the sports betting, the margins are just going to become commodity margins. So they're going to need essentially your games. The demand for the games is going to increase.
Yeah, exactly. And so the games is really
for the younger demographic.
Yeah, the games, and that's the thing. Like if you can have casino games, but if they're not appealing to the people that are trying to come to the site. So you look at DraftKings is, I think, a good example. DraftKings is making a ton of news in the US, big valuation, but their average user, I think, is around 27. So you got to start putting products out now that are getting the 27-year-old, the 18 to 27-year-old to move to your casino, and that's where people are struggling, and that's why we've had so much interest in the game side, because now we're developing those things that will bring people over there. And you also look at what Penn Gaming did and doing the deal with Barstool. Everybody knows, like, you got to attract the 18 to 30-year-olds nowadays. The 50-year plus sports bettors are in decline. The fan base for traditional sports is in decline, and the users of traditional casino games is in decline. So that's we're building for the next generation.
Yeah. So basically, so essentially the demographics, everything, the tailwinds are in the favor of fans. Everything seems to be working here. Very interesting. Okay, so what are you going to have more games rolled out? When are you going to have more stuff out there? Because and maybe just walk us through kind of that revenue model? Like each aggregator brings in X amount of casinos, each game makes X amount of dollars. Yep.
Yeah, so we did a deal with Ears, the first one, and the first step of that is actually we're putting their aggregator onto our site, the Chameleon platform. So that will allow our anybody on Chameleon to open up really thousands of games. So giving our B2B partners ways to make more revenue right away was the first step. Integrating back into the Ears next, which we'll be doing in the next few weeks. Then we intend, like I said, our third game is close to done. Our fourth one is in development, and then we'll speed those up. But we'll have 10 out, end of next year, even earlier possibly. And then with an aggregator, so getting us into one, which the Ear is, and it's not even a massive aggregator. It's a good European one, but on the smaller side, that opens up 120 sportsbooks casinos. You got millions of eyeballs just on that one aggregator, so you can go from there. We want to be in 5, 6, 7 different aggregators. So millions and millions and millions of users. We do a revenue share on every time a game's played. A good game for us can bring in, well in the 6 figures, maybe 7 figures a month if you have a hit game.
And that's all basically profit.
Yeah, for us, it's a big amount of profit. So, like I said, we just really build the game once, and then you can get it into thousands of sports books or casinos.
Yeah, it's like the I guess what they used to say about the movie business. You make it once, and it's forever. It doesn't cost you any money.
Highly scalable, and our cost to produce is very reasonable. So the upside on those games is massive. It's very little. I think one site, we can recoup the cost of development for most of our games probably. But then any of those games hit, and it's a huge win for our company.
Scott, could you outsource game? The guy's asking. It's an interesting question, huh?
So there's definitely components that we do outsource now. The names mentioned are probably ones we wouldn't just on a pure cost basis, but so we like to own the IP. So currently all concepts, all storyboarding, all of that is done in-house. And then we have aspects of those games that we do outsource. So it can be anything from sound. So the sounds, some of the graphics, some of the animation stuff. We have very good partners that we do outsource that. There may be a time as we scale, we like to, we do sort of walk before we run on some of these. So in terms of, adding massive fixed cost overhead right away, we wait to see some good traction, and then we'll build out an internal team. But currently we have everything we need in-house to do all of the design, the concepts. So I'm talking about 10 next year. We've got 20 at least in storyboard and concepted out. So we're no issues there.
Pipeline of games.
Yeah. I mean, we're at no loss for I think awesome game concepts that the market I think is going to receive very well.
Okay, Scott. Okay, so I think you got to get out of here right in the next minute or so. So on that note, I want to thank you. We'll catch up with you hopefully next week. Hope we'll have some more big news. Thank you everybody for joining the live stream, and we'll see you next time.
Okay, thanks, Jack.
Thank you, Scott.
Yep.